Welcome back everyone to Vox Markets. My name is Paul Hill, and by popular demand I am delighted again to be able to speak to Chris Mills, founder and CIO of Harwood Capital, one of the smartest and most successful UK small and mid-sized company investors. Welcome, Chris.
Good morning. How are you, Paul?
Yeah, very good. The last time we spoke at the beginning of August, I think you were just about to go on holiday to Switzerland, and you were slightly cautious on the sort of top-level markets, given the schools and the universities were sort of going back, and that sort of was a good call. But now we've had the sort of the blockbuster vaccine news from Pfizer last week. What is your sort of like your top-level outlook for equities over the next really sort of 2 or 3 years?
Well, I think one of the points to make is, in our opinion, there are way too many companies that are still valued on the concept of normalized earnings, whatever that means. And even with the bounce back expected next year, I think you're going to still see a lot of disappointment in earnings results from companies. So it's one of continued caution.
Oh, okay, right, interesting, because certainly a lot of, I think the consensus view on the markets is definitely bullish that we're going to get through the next 3 months of potential volatility, and it's going to be underpinned by business and consumer confidence, looking to all go on holiday and to have full pubs beginning of next year and to celebrate the Olympics and the Euro Championship. So I think investors are sort of like taking a far more sort of optimistic view.
Well, let's just remember that this vaccine isn't actually available yet. It needs to be produced in quite challenging circumstances, like minus 80 degrees. It needs to be distributed in equally challenging circumstances, and I'll be talking a bit about that later. There's a portion of the population who'll take it up, and U.S. equities in particular are by no means cheap. Biden is still talking about significantly increasing corporate taxes, and there's still issues as to whether the administration is going to go after the big tech companies. And let's not forget, the Democrats are as equally committed to a trade war with China as Mr. Trump.
Wow. Okay. Yeah. Anyway, let's chat just to sort of like go through to a bit of sort of individual stocks, and you touched on one, the sort of the difficulties of transporting and storing, particularly the Pfizer vaccine. And let's just assume, for instance, this their technology, I think, is mRNA sort of like sequencing technology that's created this vaccine, giving the 90% efficiency. But as you rightly say, it needs to be stored at sort of I think it's minus 70 degrees centigrade, and then sort of distributed and manufactured. But it will have to be obviously mass produced ahead of the next seasonal infection season, sort of like next fall or next autumn and next winter. There's one company that I think your portfolio has listed or partly listed, which was Source Bio International, which came onto the markets about a month ago, and they seem to be perfectly positioned to help the likes of Pfizer and any other vaccine maker store and stockpile a lot of these vaccines. Do you want to quickly talk through that?
Yeah, we were very pleased to that Source, which we are the largest shareholder in, successfully achieved a public offering a couple of weeks ago. Unusually for a public offering, the big backers of the company, which are Harwood and Lombard Odier, didn't sell a single share in the IPO, and in fact, both of us materially increased our investment. So why did we do that? First of all, if anybody can get their hands on it, I would strongly recommend the Librum Source Bio research memo that came out prior to the issue. And basically what Source Bio's got going for it is a really good core business. Now, the core business basically does three things, two of which are important. One, it is one of the largest pathology testing companies in the United Kingdom, so we're talking about cancer testing here.
Yeah.
And secondly, we are a global leader in stability storage, which basically is refrigeration systems for the pharma industry.
And that's basically chilled. It's chilled as well as frozen, isn't it?
Correct, that's right. So absolutely playing into the needs of a Pfizer if they end up as a winner. So you've got a really good business there. And if you look at the that business has been historically growing at about 25% compound.
Yeah.
And has excellent prospects for growth, because if you look at pathologists in the NHS, 25% of them are over 55. 97% of their labs are understaffed. And it takes, believe it or not, up to 10 years to train a pathologist. So the outlook for testing or pathology services outsourced is only going to go one way and increase. The second thing that's interesting there is that, sadly for all of us, as we get older, we are much more likely to get cancers. So, for example, cancer rates really take off from about 55, and incredibly, 36% of all new cancers are in people over 75 years old. So, the cancer market is a growth market, sadly. And as we all know, the government, or not the government, the NHS has not done a huge number of cancer tests. So there's a massive backlog building up once we go to more elective surgery.
Yeah, I think that you're right. I mean, the pent-up demand certainly in late 2021 and 2022 is just going to be a sort of like a tidal wave with the business. And if they can benefit from, and there should be no reason not to, of the storage of the vaccines as well on top, then it's going to really sort of energise it. The problem is going to be capacity. Is going to be able to actually meet demand, I think, which will be a lovely position to be in. I mean, my father.
I think you can make the assumption Source will be increasing its capacity to meet the demand.
Yeah, and my father's actually already invested in the company. He loves it, and I did a quick sort of valuation of the business, and even if you only assume a 15% organic growth rate, it doubles its top line over 5 years. It should be able to achieve easily, just looking at peers, at 25% EBITDA margins, and on that basis, just on a modest 12 times EBITDA multiple, you underpin the share price. It comes out at about 165, and the shares at 170. So you get everything else and the other growth, plus any upside from because it also does COVID testing, doesn't it? The PCR, which will still be needed.
Except there's a big mistake in that assumption. These businesses aren't worth 12 times EBITDA. They're definitely worth 15 times.
Okay.
You're growing at 25% per annum. You're worth 15 times for sure. But otherwise, I agree with you. And then, of course, if you look at Liberum reports, we've got 10 million of cash now. Assuming there's no more COVID tests after 2022, we're going to have nearly 100 million in cash. So,
what are you going to do with it, Chris?
Well, we're pretty good at returning money to shareholders.
Yeah.
We'll obviously grow our capacity. We'll look to see if there's any opportunistic acquisitions that make sense for us. But in the long term, as you will have noticed, a lot of our businesses ultimately get taken over.
Yep. Yeah, I'm very positive on the stock as well. It looks absolutely perfectly set for considerable growth, top line and bottom line over the next 5 years. And I would agree, 12 times multiple. I did take a conservative level, so apologies for that. Just moving on to another one you've actually IPO'd. Now, I spoke to another sort of Hall of Fame fund manager last Monday, a guy called Andy Brough from Schroders, and we were talking through his portfolio, and he was saying, he complimented you actually, Chris, and said you were a particularly brilliant investor in sort of diagnostics and healthcare and life sciences, and he's followed you into a number of one and done very well. And I think he's in EKF with you at the moment, and Renalytix also. But another company that you've just listed, or the portfolio has just listed, is Verici. And that does very, very clever immunodiagnostics kidney transplant tests. It came to the market at 20p. The shares have now moved up to about 44 or 45p as of today. Could you just quickly talk us through how you see immunodiagnostics? Because again, the Harwood Capital portfolio seems to be perfectly positioned to. I mean, this is a multi-decade growth opportunity, immunodiagnostics.
Yeah, and Verici is a really interesting little business. Basically, you've got two technologies behind this thing. The first, which is unique, is a test to predict early acute rejection prior to an operation of a kidney. So basically, it's understanding your immune system. And if you have a weak immune system, when they suppress the immune system, they can oversuppress it, which might reduce the chances of the kidney being rejected, but materially increases the chances of you getting cancer, for example. Or if you don't reduce the immune system enough, you will get a rejection. And that's proprietary technology. The second is best in class tests for post-operation direct measurement of the immune response with industry-leading specificity and sensitivity testing. Now, that's important because all the rest of the competition basically, after it's already been damaged, and try to understand the damage within the kidney. This test actually examines this and tries to understand how to prevent the damage. And these are big markets, because an average kidney test costs nearly $500,000.
Yeah,
so protecting that kidney is very important, and when it can be done for relatively small thousands of dollars, we believe this company could become quite a big company. I mean, if you look at the advisory board behind it, we've got 5 past presidents of major transplant organizations. We've got the current president of the American Transplant Organization, and you've got universities like Oxford, King's College, Yale, and Cleveland Clinic.
It's the who's who of the kidney transplant world, isn't it?
Yeah, it kind of is. So
cornered the market in experts in kidney transplants.
Yeah, but what it does mean is that if we can deliver a product that says it does what it says on the tin, we'll get early adoption. And the kidney world is a relatively small world, and that would potential for very significant profits to be made here, and value creation. If you look at CareDx, whose technology, frankly, isn't nearly as good as ours, they've got a market cap of £2.2 billion, and we've got a market cap of less than 60.
Yes.
No, sorry, 65.
Yeah. I'm totally with you in terms of I think investors can take a lot of comfort by looking at who you've got on your scientific advisory board, because it's a massive endorsement of the efficiency of the actual technology, the effectiveness of the technology. And I think the total addressable market is around about $700 million. And if the company only gets sort of like 10% of that market, 70 million, say in 5 or 6 years or whatever, and you run a 10 times multiple, you get to well over £500 million business, which again, compared to CareDx, is still relatively cheap.
But it won't work that way. If it works, you're going to get way more market share.
That's what I like to hear. And I would also say what I found, again, as particularly reassuring for investors, is that they probably read about the Pfizer vaccine, and that has basically, as I say, has been a transformational sort of game changer for the whole vaccine industry, and it uses leading mRNA technology, sequencing technology. Exactly the same technology is being deployed for this immunodiagnostics tests and database that Verici does. And not surprisingly, the efficiency of the vaccine is 90% plus. And as you rightly point out, Chris, the specificity and the sensitivity of the tests for Verici are post-operative are over 90%, which is way better than the opposition.
I mean, 97% to be exact.
Oh, is it? Okay. Sorry, I'm a bit too cautious at times, but anyway, just move it. Okay,
and one mustn't underestimate, the impact of the Mount Sinai relationship, because you basically have a testing ground for not only do they develop these technologies, but you have a testing ground for these technologies, and we're going to come on and discuss their antibody test. And when you see the statistics on that against pretty well everyone else, it makes everyone else look like a joke.
Yeah.
And moving on from Verici.
Yes. Yeah, moving on for Verici. I mean, if you can quickly talk, I mean, you've obviously done really well on the likes of EKF Diagnostics, Renalytix, and Ergomed over the last sort of like 12 months.
Yeah, Ergomed we've sold now because at a 360 million market cap and 18 million of EBITDA this year, that's way overpriced, in my opinion. The Prime Vigilance business is a good business, but I wouldn't put more than a multiple of 15 to 17 times on it. Yeah. And the CRO, I can tell you, I've owned CROs, and they're commodity businesses, and 10 times.
And so, how did you get rid of that holding, Chris? Did you sell it off market to another fund manager, or did you pushed it into the market?
No, we just waited till we got bid for it.
Right.
Actually, we got a premium to the market price at the time.
Well done.
It subsequently got up, though. Anyway, moving on to EKF. Well, what's not to like? I mean, the way we kind of see EKF is, again, you've got a really good core business sitting in there. We are now probably the world's leading company testing hemoglobin. We have unique tests for ketone acidosis. We are a major player in testing for diabetes through point of care. And we have a good enzyme business. And all these businesses are growing rapidly, not least of all because McKesson, who has about a 67% market share of hemoglobin testing in the United States, has now gone exclusively with EKF. Now, it's not a big market, but it's adds sort of 10 million of sales and quite a lot to profit. So where I kind of see EKF is the core business probably worth 200 to 225 million pounds.
Yeah.
Then you've got 30 million of cash, and this is on a 300 million market cap.
Yeah.
And then what are you almost getting for free? Well, first of all, you're getting Prime Store for free. Mm. And Prime Store, as we all know, is doing very well indeed. We recently announced we won major contracts with the Irish government, and we'd also won a contract with a UK government entity, along with a lot of commercial customers. So that's going like a train. And let's remember, Prime Store wasn't developed for COVID-19. It was developed for the virus. So now it's on the map. There's no reason to believe Prime Store won't continue to work for a very long time, even if COVID-19 slowly but surely disappears. Yeah. Secondly, we're really excited about the recent investment we made in Trellis. Mm. Basically, Trellis has proprietary rights to all Mount Sinai's technology relating to immune bowel disease. Mm. Now, to put immune bowel disease in the United Kingdom, it's estimated to be one of the largest sources of absenteeism, as in the United States. Yeah. There's about 500,000 people with IBD, of which about 170,000 of them have Crohn's disease.
Oh, okay, right, yeah, okay.
Okay, now Crohn's disease is a horror story. You get it when you're young, and it doesn't kill you. And the current lifetime cost for someone with Crohn's disease is over £500,000. Yeah,
no, I've got it, Chris.
Okay, well, it's not...
So I know exactly what you're talking about. Unfortunately, Humira, which is the world's biggest best-selling drug, at about 20 billion, I think it's made by AbbVie, which is the standard of care or the top level, and in the clinical pathway for the NHS, only works for 50% of people with Crohn's. And unfortunately, I'm one of the half who don't. But what that means is that the opportunity to improve that and to move it with new technologies to a higher level would be absolutely a game changer for people who are unfortunately affected by, as I say, this debilitating disease.
Well, Trellis isn't going to do that. What Trellis is doing is basically taking all Mount Sinai's IP and basically you do a quick diagnostic test, which is cheap, about £250. And then basically Trellis gathers all the information around your Crohn's disease. Right. And teaches the doctors how to treat you better.
Marvellous.
So, for example, you will get panic attacks from time to time because Crohn's, actually, you do get panic attacks. You think the disease is recurring. Yes. You rush off to the hospital. Actually, all you've got is a panic attack. So one of the things that Trellis will do will give you... and the trouble is the doctors don't really know how to treat it.
Mm.
And in the United Kingdom, they're really bad. They put you on steroids too quickly.
Yeah.
And then they put you on bags way too quickly.
Mm. Yeah, and also the whole diagnosis procedure is very elongated and very expensive. I mean, it took me sort of 18 months to 2 years to get properly diagnosed, going through the clinical pathway of all the relevant tests and treatments that you need to do.
Well, this is what Trellis is going to actually do. It's going to take all of that, put it together. You'll have a 24/7 person who can call up your file at any time. And basically what they will do is help you manage your disease, but at the same time reduce the cost to the payer.
Yeah.
And the business model is, which will be rolled out in the United States, and actually we expect to have our first revenues in January, is to basically take 25% of the savings. So basically, the Trellis service is free to you and materially reduces the cost of your healthcare provider's cost to you.
That is an innovative business model. That'd be perfect, because you say you effectively, in the eyes of the payer, you're effectively it's paying for the service pays for itself, doesn't it? Massively. Yeah.
And
it's
the
free.
American market is absolutely huge. The cost of Crohn's in the United States is about, well, it's hard to say, but at least $10 billion a year. Might be 15.
Okay.
In the United Kingdom, it's nearly 2 billion.
Yeah.
So, and
that's in the EKF share. That's in the EKF share price for free. Then the Trellis.
Yeah, that's in for free.
Okay.
And then the other thing that's still sitting there, which we just announced, is we have the distribution rights for Europe, and exclusive in the UK and Germany for the Mount Sinai antibody test. Now, we're seeing, I suspect everybody is so fed up of hearing the word antibody tests, and we all know that the Roche one didn't work, and the Abbott one wasn't that much better, and now, Abingdon claims it's got a great test, but Public Health England says in reality, the specificity, in real life settings, specificity falls to 84.7%, and Ponsfield of the University of Wales comes out and says the Abingdon test has overestimated the test accuracy and it should not be widely used. The fundamental problem with most of these tests is they don't have a big enough sample source. So I think if you look at Abingdon, they're talking about 2,000 or something like that. The Mount Sinai test has now been done on over 75,000 people in a real-life setting in hospitals in New York City. With obviously the Mount Sinai system leading that, but other major hospital groups in New York City also adopting it.
Yeah.
And it has a 99.6% specificity based on 75,000 people. Wow.
And I mean, just for investors, they probably hear about antigens, which test whether somebody's got COVID, but effectively the antibody test effectively says whether somebody's got immunity to COVID.
Correct. And that's the other aspect to the Mount Sinai test. We've already got it CE marked, but what we're really waiting for is to get Drug Administration approval, allowing us to basically say we would be the first quantitative test as well as qualitative test, which could determine your exact level of immunity.
Right. Okay.
And that is unique technology that Siemens is also researching that and may have a viable product, but it doesn't exist in anything that's available in the United Kingdom.
Okay.
What that in essence means is, let's say you take the vaccine, right? But the vaccine slowly but surely wears off.
Yes, after 3 months, 6 months, yeah.
Okay, so you want to do this test to see if you've still got sufficient, they call it titers in you.
Particularly if you're a doctor.
The number is 4.
Yeah.
To confirm you still have immunity.
Yeah.
So, EKF, once this gets through the FDA, has life way beyond COVID because it's got life relating into vaccines.
Yeah.
So really excited still about that. We haven't sold a single share.
Yeah.
And, obviously at some stage we will have to, because it'll be too big a percentage of our portfolio. But it sure ain't at this price.
Okay, well, I certainly agree with you on that one. With Stochastia, you talked about it last time, and it's around the same price. And did notice that Harwood just recently put another, £2.5 million in, along with another large investor, to give it a bit more equity. And the business seems to be right-sizing very well. It's obviously been, as I remember, I think you talked about it last time, it does asthma diagnostics. It's the leader. It's a growth business. Did sales of about 35 million last year, but it's been hit by, obviously, COVID this year because of had elective procedures pushed to the right. And it's reduced, it's right-sized its cost base. It's got cash on the balance sheet. And it's looking, it looks good for 2021 and 2022. What's your view?
Look, the team doing Stochastia know exactly what they're doing. Ian Johnson and Michael Roller were key parts of the team that turned around BioQuell. Yeah. You're absolutely right. It's been hit by elective surgery being put back this year. But the product is a market leader. It's got gross margins on it of about 80%.
Yes.
About 80% in a normal year of its recurring revenue. And, Ian's performance targets where he gets his super shares, he's got to get the share price to 50p. At least in our mind, we can see a clear pathway for him to get there.
Yeah, he's already right-sized. In his last announcement, he said he had basically reduced the cost base to an annualised level of 23 million, excluding head office costs. So if you put that into it, it's just south of 25 million. If you assume they get back to just where they were, this is a growth business at 35, that means effectively 10 million of EBITDA coming straight down to the bottom line.
Yeah, I mean, our number, to be honest with you, is we think he can get it to 40 million of sales within 2 years.
Yeah, well, compared to the market,
that takes you to the 10 million. But the real key then is what's 32 million of gross profit worth to somebody?
Yeah,
who's got a distribution system in place.
Yeah, no, I was going to say that compared to the market cap of about 100 million today with 10 million of cash, then you could probably put, certainly if you put a 10 or let's do a modest 12 times EBITDA multiple on EBITDA. Push it for a few years. You're going to get way over 100 million market cap.
Yeah, but that's not why this company is valuable. Basically, it's a relatively small business with a global distribution system.
Yeah.
Strip out the gross profit of 32 million on 40 million of sales.
Yeah.
And then put that through someone's distribution system where it's a marginal cost rather than an absolute cost.
Right. Okay. So it's worth the synergy value.
That's how you get the multiple for this thing.
Okay. Well, that's definitely in the middle of my crosshairs, Stochastia, that's for sure. And I know a lot of people bought the shares off the back of when you talked about it 3 months ago. And just finally on the sort of the life sciences, I noticed you've got Benchmark in there, which is basically an aqua pharmaceuticals business, sort of like pharmaceuticals and treatments for salmon and sea bass and shellfish and stuff like that. I'm just wondering what you see as the main USPs. The shares have recovered, but still have a lot of upside.
Right. Well, look, it was, in our opinion, not a very well-managed business, lifestyle. New management's gone in, done a really good job getting rid of peripheral operations, reducing the cost base. And what it comes down to now is, does the salmon delicing product work? If it does, the stock will go very significantly higher. Yeah. There's no indication it doesn't work, but as yet, the Norwegian government hasn't signed off. Once it has signed off, you'll start to see this company make very significant EBITDA.
Yeah, I mean, if that product works, that'd be absolutely. I remember when I first started in my business life. I worked for Unilever, and we had one of the companies that I looked at in detail was Marine Harvest, which we owned the rights to and the business, and it went through a boom time in the early 90s, and then unfortunately there was a massive sea lice and fungi problem with salmon, and a lot of the actual fish died, which was terrible. But it just shows you, if you can actually sort that sea lice risk out, then that's a huge benefit to commercial customers the size of Unilever. Well, they don't own it anymore, it's a separate business, but It's a huge market, isn't it? Salmon farming.
It's very large, and on top of it, the claim is that this product is environmentally good, i.e., it doesn't hurt or do damage to the surrounding water or other animals.
Yeah.
Or fish, obviously.
Okay. And then just sort of like stocks which are certainly sort of piqued my interest in terms of short-term recovery plays if the economy starts moving. We've got sort of like, you mentioned Tribal last time in terms of student and university SaaS software solutions, and I had a good look at this after we discussed it, and I sort of ummed and wondered about the reopening trade in terms of whether the students would actually go back into university and to schools and stuff. I was dead wrong there. And the shares have actually done really well, because I think you bought them at sort of like 30p, and they're about, last time I looked, about 75 or something.
Yeah, I mean, actually, we were buying them at 50, but look, basically, the universities need that software. The exam testing business obviously got hurt, but not as badly as we might have expected. The company's got no debt. Comfortably heading to 13, 14 million of EBITDA. Interesting technology. In my opinion, it gets taken over sooner or later.
Yeah, I would agree. Yeah,
it's only 140 million, and software products for education don't trade at 10 times EBITDA.
Yeah, it's got a very clean balance sheet as well, hasn't it? It's got about 10 million of cash, I think. That's
right, and they sorted out the lawsuit they had with earlier this year.
Yeah,
and very relaxed about Tribal.
Yeah, another one you mentioned was Avingtraz, which is industrial business which designs and manufactures sort of critical components, doesn't it, for a variety of industries? And you said it's a sort of mini Melrose, I think you mentioned.
That's right, and we did something we don't often do, actually, since I last spoke, and we actually bought a lot more shares off someone I would regard as a very clever investor.
Oh, right.
And I think we bought another £4 million worth, something like that. But we still feel, I mean, he'd been a long-term investor. I think it was more to do with capital gains tax planning than anything else. Though we feel very comfortable with Avingtrans. Our breakup value, we revisited the property, and actually it now suggests, I think we said the property was worth 17 million last time.
That's right, yeah.
We're now thinking it's worth over 20.
Right.
May 21 debt will be down to about £4 million. EBITDA current year to end May is 12, and that's adjusted for IFRS. It would be more, but IFRS isn't really EBITDA.
Yeah.
And we're still very comfortable that businesses could break up for £4 a share. So yeah, we bought a lot more shares at £2.50.
Right. And just on that one, with regards to the property value increasing, I noticed also you've got MJ Gleeson, which is a house builder and sort of like strategic land buyer. That looks a very astute investment, because the house builders have obviously risen on the back of the vaccine news last Monday, but are still very, very cheap compared to what their potential opportunity set is.
Yes, I mean, you got to remember, Gleeson for us has been a very long-term investment. We bought some shares in 2008 at 50p, for example, and it's about 6.30 today. Our average price is about £1.
Well, you did say you're a long-term investor, 10 times your money. That can't be too bad.
Gleeson is a very interesting house builder. It provides affordable housing for people in sort of the northeast and northwest. And by affordable housing, it really is affordable. Entry point for a two-bedroom home, I think £114,000, £115,000.
Yeah.
Three-bedroom home or four-bedroom home, I think it's £140,000 from memory. Strategic land is a good business, but obviously it depends on how buying strategic land. We develop strategic land.
Okay, yeah, it looks
and again, company's got no debt, good shape.
Yeah, another one you've got in your portfolio, which we briefly mentioned, that I spoke to Richard Staveley after we talked about sort of this company called it's OGM, which is the UK's largest hazardous waste treatment stroke landfill company, and he was very bullish on it. That's Richard Staveley, another very good fund manager from Gresham House.
Sorry,
that's all right.
Okay, sorry. Augean, it's interesting, Augean. Basically, came through COVID really well.
Yes, very well.
And still making good money. The
management team there has just done an unbelievably good turnaround job over the last 3 years. I mean, it's Jim Meredith and Mark Fryer there, isn't it?
Correct. Jim and they're a great team, and Jim has done an unbelievably good job.
Yeah.
So if you look at Augean, we're not the claim we should be debt for market cap today is about
190 million. Yeah.
So we're 7 times, should we say, perhaps a little less. By the end of the year, we'll have very little debt. And we have this huge claim against the British government for approximately £50 million for taxes, which we don't believe we owe.
Yeah.
And we have our first recovery of about £1.5 million, literally in the last 4 weeks, which is in the public domain.
Yeah, that's all optionality, isn't it? All optionality upside.
Correct. And, for companies to be able to pay off all its debt, pay the inland revenue 50 million, and still within 2 years have no debt.
Oh yeah,
it's an amazing achievement.
It is, yeah. Well, I mean, I think when at the darkest moment 3 years ago, just before sort of Jim and Mark took over, I think it had 20 million pounds of net debt, and the share price was sort of mid-20s. So to take it to £1.90, generate so much cash, and be able to basically put 40 million or 45 million in escrow to the HMRC just shows you the achievement of the management team. I
remember we bought most of our position at 30p.
Okay, well, that's been a sort of like a very nice investment. Okay, just turning.
We do have some disasters,
Yeah, no, well, I was just going to turn to that actually, Chris. Well introed. I was just wondering about Stobart. He came out with an announcement this morning in terms of Aer Lingus. I think it was as expected anyway. Have decided to sort of like terminate their franchise agreement for turboprop planes going into Southend Airport.
I think it's more than just Southend Airport. I don't know. I mean, is it? Okay, yeah. Going from all over the country into Ireland. So,
what is your latest view on Stobart? I mean, the shares have just obviously at very low levels, 26, 25p. They didn't go down this morning on that news. And there's a lot of upside. The one question I had, I know from last time, was that if they could ever extend the length of the runway to allow the workhorses of the low-cost carriers, the narrow-bodied planes, the Boeing 737s, rather than the turboprop wide-body, which obviously can take off on shorter runways. If they ever could do that, then they would have perfect access into to London.
Yes, I don't know the answer to that question. Okay. Look, I mean, we were clearly unlucky. I mean, they were so close to doing a deal with an infrastructure fund before COVID. It certainly has been the worst investment we made for a very long time.
We'll let you have one catastrophe, Chris. Your portfolios have done very well over the last 12 months, both of them.
Yeah, I mean, Oryx is up since the beginning of the year about 11%.
Yeah.
North Atlantic, we think, is up about 4%. In a tough environment too, because other cyclical stocks that we had, which actually been good investments, but not in the short term, is something like 10 Entertainment Group, which is now 170, but it was £3 at the beginning of the year, and that was 10 million shares, or 13 million, or 2% of our NAV. So. In North Atlantic, it wasn't known in Oryx. So, there have been some difficult investments this year. having said that, North Atlantic had a small miracle where we have a stake in a US high technology cybersecurity company, which is going public as we speak.
Yeah.
And a £3 million investment might have just gone to 24 million.
Right.
So
Okay.
A bit of luck. That was pure luck. Trust me.
The Mills magic.
Planned, or that investment was made 20 years ago.
The Mills magic come good again.
No, that
just
was
at the right time.
Wand. No. That was categorically not a magic wand. That was absolutely pure fluke.
Well, I must admit, my father is watching Harwood Capital like a hawk at the moment, because he's followed a lot of your investments, done really, really well, and continues to do that. So, big thanks to that to you and your guys there, and please keep up all the great work. So. Anyway, I think after 40 minutes or 43 minutes, you better call it a day. And
well, if you want just a couple of ideas, I could throw out in a couple.
Oh, yes, please do. Yes.
Okay, things that we kind of like, which probably people haven't talked a lot about.
Yes, please.
Animal care. Doubt you ever heard of it. Stock's 160p. It was 190 at the end of September.
Yeah.
Basically, it was hurt by the lockdowns earlier, but actually this time all the vets are still working.
Yeah, I agree.
We all know demand for companion animals has been very strong, so the outlook's promising.
Agreed. Just look at Pets at Home. I mean, their sales have rocketed.
Correct. And sooner or later, all those animals, sadly, will need drugs.
Yeah.
They brought in some new management led by a lady called Jenny Winter, who's literally transformed the business, focused it, got the debt down, reduced the number of... What they did was had a scattergun approach to their R&D. She's now focusing it.
Yeah.
And if some of these new products work, I think it could be a very exciting stock.
Yeah.
Another one, which kind of, it's so illiquid, it's kind of more a personal investment, but my God, it's cheap. A company called FBD. It's an Irish insurer. Stock's about just under €7. Basically, it insures farmers and SMEs in Ireland.
Yeah.
Good market share. Tangible book is €10. Solvency is at 186%.
Yeah.
Now, for years, these guys have been super conservative. And they reviewed their reserves at the end of 2019 and basically made a profit of €112 million.
Right, okay.
Market cap of 240 million.
Right, okay. So half...
They're trying to pay a special dividend of €1 a share.
Yeah.
Which isn't included in my $10 book, €10 book value.
Yeah.
And on normal... Now, this year, they've obviously had the risk of the COVID-related business interruption.
Yeah.
Which they are in the courts like everybody else is. But in a normal year, the thing makes 40 million, P of 7, a yield of 7.5 in euros. What's not to like?
Yeah, no, I would agree. The insurers still look really cheap. I mean, you had, I mean, just give you an indication, was that RSA have just been taken out at 50% premium. Aviva has now come back, but all of them are still really undervalued just because they've been caught in that COVID crossover. You said it was called FBD, is it?
FBD, yeah. Stock €675. FBD.
Yeah, FBD, fine. And it's trading.
Basically, it's very conservatively managed.
Yeah.
You don't find 70 million of profit that you've underreported if you aren't running a sensible business. Okay, one last one for you, which we are buying. Kenmar. Market cap's 330 million, debt 17 million.
Yeah.
Basically, it mines titanium oxide used in white paint.
Yeah.
Should be a real beneficiary of any recovery in GNP this year.
Yeah.
Titanium dioxide market is tight because there was huge overcapacity about 12, 13 years ago. Yeah. No one's built any new mines. Some of the old mines are just slowly but surely disappearing.
Yeah.
They've just completed a major CapEx program to increase capacity and to go for higher grade ore. Stock trades about half book value.
Yeah.
By 2023, if you read the broker's research, they're expected to have about 130 million in net cash.
Yeah.
P of 4, yield of 8, and trading at less than 2 times EV EBITDA.
Sounds like a value play to me. Particularly when
it could be a bit of growth too.
Oh yeah, no, I mean particularly as the Chinese economy is coming roaring back for sort of like basic metals and all kinds of stuff, isn't it?
Yeah, but they put themselves up. They sell their product on basically a year in advance. Most of it a year in advance on long-term contracts, and based on the current price of titanium dioxide, they should have a good uplift next year.
Yeah. Sorry, what's the company called again?
Kenmar, Kenmar.
Kenmar. Fine, got you. Yeah, I know the one. Yeah, yeah.
So, I mean, it's performed very well this year. It's been a bit of a winner for us, but I think it could go a lot further.
Brilliant. Okay, well, thanks, Chris. I mean, that's absolutely, as last time, fascinating, and lots of stocks to think about and to track. And as I say, I think I'll be joining my father's club and watching you like a hawk, I believe. So, thanks again, Chris, for your time, and best of luck.
Thank you very much indeed. And because I probably won't be speaking to you before, have a very happy Christmas.
Yes, likewise. Brilliant. Thank you.